Good morning to you all. Welcome to this episode of Dollars with Sense. I'm Ela Lange.
And I'm Terence Vanderwood. Good morning.
Hey, Terence, guess what?
What?
At this time of the year, there are, of course, a lot of changes and new adventures. And with that occasion, our buddies over at the Tri-City radio station have also gone through changes. They've changed their name. We are still your two financial gurus, but we are being broadcast now by 98.7 The Point. Very cool. I'm very excited. So it's been a fun journey. So far we have, my goodness, so many episodes. And with this episode, we're going into our grab bag of questions around education savings.
Yes, we're really lucky to have this opportunity to share our knowledge with you, the listeners. And that's why we started this podcast and radio show. Comprehensive financial planning is our passion, and helping people grow and protect their wealth is also our passion. From what we can see, we are addressing topics that interest you. So thank you for all your questions and comments. When we come back from the break, Ella and I will answer some of them around children's education planning. Stay tuned. We'll be right back with Dollars with Sense.
Welcome, everyone, to Dollars with Sense. I'm your co-host, Ela Lange.
And I'm Terence Vanderwood. We are your two financial gurus. If you're just tuning in, we are answering questions today we received in our email box over the last little while around children's education planning. If you have a question or comment, please contact us via email. We'd love to receive those at twofinancialgurus@gmail.com. That's the number 2financialgurus@gmail.com. Or you can reach us by phone at 778-879-0820. You can also connect with our Facebook page, Dollars with Sense. And finally, on our YouTube channel, just punch in the numbers under the YouTube search bar or the letters Ella and Terence, and we will show up. Okay, Ella, let's start us off with the first question.
Sure. First one is from Anna, who writes, I'm a mother of two children, 3 and 5 years of age, and I want to know more about what happens to my money that I've saved up in my RESPs if my children decide not to go to university. What if one does and the other doesn't? What are my options, please?
Okay, so Anna, those are two excellent questions, so we're going to answer them in two parts. First, let's address your concern about what happens to your money if your children do not go to post-secondary school. If your children decides not to use his or her RESP, Registered Education Savings Plan, consider the following before you cash out. When you close an RESP without using it for your child's education, you must pay taxes on the interest earned on the government's contribution of the investment. Any money from the Government of Canada, so the Canada Education Savings Grant, which is a grant that equals to 20% of RESP contributions made up until the end of the calendar year in which the beneficiary or your child turns 17, that must be returned. If a sibling has grant room available, it may be used for his or her education.
The money that the subscriber or owner has contributed can go into your RRSP so that it's tax sheltered and does not trigger a taxable income for that year. Money from a Canada Learning Bond must also be returned to the Government of Canada, and it cannot be transferred to another child. This government initiative, available for children born after December 31st, 2003, offers $500 to help parents who are receiving the National Child Benefit Supplement to start saving early, plus an extra $100 each year up to age 15.
Thanks, Ella. And now, Anna, what if one of your children go to the university and the other doesn't? The basic rule is that a transfer between siblings is always allowable and eligible so long as the receiving beneficiary's plan was established before he or she turned 21. The receiving beneficiary, who is your child, is a resident of Canada at the time of the transfer, and the receiving beneficiary has a valid social insurance number. If all of the above is true, then all Canadian Education Savings Grants will follow with the contributions and income, but the CLB, or the Canada Learning Bond, will be repaid. The transfer will have no effect on the receiving beneficiary, the other child's, lifetime contribution or Canada Education Savings Grant limits.
However, if the total CESG in the combined plan contains more than $7,200, then eventually that excess will be repaid, as the total amount of the CESG that can be paid out to a given student via EAPs, what we call in the industry, or education assistant payments, is still $7,200. But the excess amount is not clawed back at the time of the transfer, rather at the time that the plan is terminated. It's important to note here to work with your financial planner and accountant concerning these matters so that you are made aware of any excess amounts and if any tax implications exist.
Don't forget, RESP accounts can remain open for up to 36 years. Your child may decide to enroll later in life, so this gives us parents more time to see if our kids will go to school. Just because they don't want to go when they're 18 doesn't mean they won't go when they're 28. It's also worth noting that an RESP can be used for a range of different apprenticeships, full and part-time studies, as well as other programs offered by government-designated institutions.
And some trade schools, folks. For a detailed list of designated and or certified educational institutions, I would recommend you check out www.canlearn.ca. Or you can contact the CRA toll-free at the number that will appear on your screen now. That's 1-800-959-8281. So yeah, I would give those guys a call first.
Okay, we've got a question from Campbell. My parents, the children's grandparents, want to contribute. Should they have their own RESP for their grandchild?
Thank you, Campbell. I'm sure this is a common inquiry for most people. So when an RESP is established, the Income Tax Act requires that the financial institution or promoter notify the beneficiary or the custodial parent or legal guardian of the beneficiary of the existence of the RESP and the name and address of the subscriber. This helps to ensure that contribution limits are not exceeded, or if they are exceeded, the excess contributions are promptly removed. I'd keep it simple by having your parents give you the money to contribute to the RESP you've set up for your child. Essentially, that's one RESP per child.
Yes, it's best practice to have one RESP per child. We're going to take a break here for a moment and answer more questions from our awesome listeners when we come back to Dollars with Sense. Welcome back to more Q&A around education savings planning with your two financial gurus. Ella, take it away.
Thank you, Terence. Okay, here's another brilliant question. What happens if a grandparent who is the subscriber of a child's RESP passes away before the child uses his or her savings? If an individual who is the sole subscriber to an RESP dies, then the entire RESP will form part of that individual's estate. Remember, an RESP beneficiary has no rights to any of the property in the RESP. Designating an RESP beneficiary is not the same as designating the beneficiary to an RRSP, for example, or a RIF, RRIF, or TFSA, as those type of designations are intended to describe who will receive the plan assets at the death of the annuitant or holder, whereas an RESP beneficiary designation only indicates against whose contribution limit and CESG limit contributions are being made. Now, an estate asset, the value of the entire RESP, as I mentioned before, is potentially subject to probate and probate fees.
Ooh, boo. We don't like probate fees. An RESP may continue to exist even following the death of the original subscriber. The deceased's will may appoint a new subscriber to take over the plan or authorize the executor to make that appointment. Hence the importance of a will for exactly this reason. By the way, folks, this applies to all provinces outside of Quebec. They have their own different rules. En Québécois. On the death of a sole subscriber, the executor will instruct the RESP promoter as to the identity of the new subscriber. In making that decision, the executor should consider the terms of the will and the wishes of the estate beneficiaries. The executor should only appoint a new subscriber if there is nothing on the contrary in the will, which typically means only if the will specifically authorizes this. The executor may choose any of the following to be the new subscriber: the estate of the deceased original subscriber, a testamentary trust created by the will of the deceased original subscriber, or any other individual that the executor or the beneficiary's parent or the beneficiary's aunt or uncle or whomever that the executor may choose. The new subscriber must have a social insurance number, and from a compliance perspective, must usually be a resident of Canada. Bit of a gray area there.
Well, that's why we always recommend you seek advice from a legal representative. Find a lawyer who has a specific trust and estate practitioner certification to guide you through the process to be sure your wishes are clear and incontestable. If you don't have one, ladies and gentlemen, please feel free to email us or call us for a referral.
Okay, one last question before we break. Yan writes, my son is already 15 years old. Would it make sense to start an RESP now so he can use it for university? And if not, what are the alternatives? Well, that's a great question, Yan. So you've got 3 years to go before your son goes to university. You've 2 years before he turns 17, which is the last year he is eligible to receive the Canadian Education Savings Grant. He can receive up to a maximum of $500 a year, so that's a total maximum in 2 years of $1,000. So you have to be careful about the rules around that. So the question is it worth it? There are options such as contributing to your TFSA, using equity in your home, and student loans. Is it worth it? Is a question that comes down to a case-by-case scenario. So it's best to consult your financial planner or advisor regarding what your best options would be.
And I would like to propose another solution here, if I may. You may have heard of a product better known in the financial industry as a HELOC. That's a home equity line of credit. At Investors Group, the similar product is called an all-in-one, which is a complete cash management solution that utilizes the equity in your home or secondary residence to consolidate all of your banking and financial needs. The all-in-one functions as your checking account, savings account, line of credit, and mortgage, and it can be used for everything from day-to-day expenses to home renovations, investment contributions, education savings, or even as an emergency fund. Before we get to the final segment of today's show, feel free to reach out to us if this discussion has raised more questions for you. You can reach us by email at 2financialgurus, that's the number 2financialgurus @gmail.com. Look us up on Facebook. The page is very easy. It's called Dollars with Sense. You can search us on our YouTube channel. If you look on the search bar and type in Ela and Terence, we'll come up. And of course, we've always got a phone number available, 778-879-0820. Don't go away. We'll be right back with more education savings, questions and answers, and your action items here on Dollars with Sense.
Welcome back to our last segment. Something I want to emphasize is the importance of planning. We are financial planners. Our job is to help you look forward into the future and help you take charge of savings early on.
That's right. That's why we suggest establish an RESP for your child as early as your cash flow allows. Get the matched 20% free money from the government. They are giving us free money. Decide what you can afford to pack away, or what's a pack is a pre-authorized contribution, what you can contribute monthly for this goal. Automatic contributions coming out of your bank account into an RESP, as long as you can afford it. Organize it for it to come out bi-monthly, monthly, anything you can afford. And if you run into trouble, you can stop and start it anytime you need to. Let that money grow. Add a line item into your cash flow designated as education savings. If it works, set it up, automatic withdrawal into a savings account. Then see a financial planner, give us a call, and then we set up an RESP, which you have to be sure your child has a SIN number. That's absolutely important. And watch your savings grow.
Yes, so your action item for this week is to send us a question. I am quite certain this discussion has led to more questions that are left unanswered for you. Your action item is to reach out to us in whatever format you feel most comfortable and ask us that question that is stopping you from making the financial decision you know you need to make. A new season brings on the desire to make the changes in our lives that will help us reach our goals. Take action on that desire.
Yes, and keep your questions and fantastic comments coming. We absolutely love them, and they help us to actually decide what subjects we take on. So write to us at twofinancialgurus.com, as we've mentioned before. Call us, 778-879-0820. We often have comments coming in through Facebook, so just look up Dollars with Sense. And, of course, our YouTube channel is awesome because you can listen to over 26 episodes that have immense knowledge about everything around your finances. Here we are. On behalf of Terence and I, your two financial gurus, we wish you a wonderful week ahead, and may your dollars and cents be with you.